Hey everyone, welcome back to Chipstock Investor. Hope you're having a great week. We're going to be talking about applied materials.
Well, hold on a sec. You powered up between record sessions with a hat. I mean, we still have our matching jackets, but
The hat's back.
the hat's back. It's good. It's good that it's back. This is a Casey power up, everybody. Sorry. Applied Materials.
AMAT stock has taken a hit just like everything else in the past few weeks. But as many of you viewers know, applied materials is a core position in our portfolio. Is the stock a burnout? Are we worried about that? How is applied materials gearing up for the next round of chip innovation? And we need to focus on the fact that applied materials is more than just a generalist. It's really a private equity of advanced materials technology. Here's the stock price over the last year. As you can see, applied materials has not been a big winner over the last year. However, if you zoom out a little bit and take a look at what applied has done over the years, this is all the way back from 2015. That's right before they aborted the attempted acquisition of Tokyo Electron. Applied Materials has a 10-year total return compound annual growth rate, or CAGR, of 21%. That's absolutely market obliterating since 2015.
Yeah, and important to point that out too. You note the aborted acquisition of Tokyo Electron. So even if your timing was very poor and you bought kind of at the tail end of that, still in the hopes that Applied would get this deal done. And then, of course, it got nixed by regulators. The stock took a tumble after that. So if you go from 2014, 2015, early 2015 peak to this most recent market correction, you're still sitting on a 21% CAGR. That's the power of a quality business. And so interesting to note here, there is an alternative reality here that maybe instead of Fab 5, we only have a Fab 4 if Applied and Tokyo Electron did become one. But this is still very much a fantastic place to invest if you're interested in industrial manufacturing, especially next gen industrial manufacturing. Let's maybe talk about that. We view the Fab 5 as kind of almost like one singular position in our portfolio, core position for us. And we'll explain why we think Applied is still very much gearing up for many years of semiconductor and manufacturing technology ramp up in the years to come.
It could have been the Fantastic Four instead of the Fab Five.
You're really just still hoping that the MCU makes a comeback, aren't you?
It's not happening. You know my thoughts on Disney.
I think the MCU will make a comeback. Still have Black Panther 3, Fantastic Four. What else is coming? I don't know. Never mind.
Here is a quote from CEO Gary Dickerson talking about the launch of their EPIC advanced packaging strategy. And Applied Materials is focusing on specifically advanced packaging substrates for 3D integration. We've talked about that in a couple of videos that we'll link right here. But as the CEO mentions, Applied Materials is leading the team for silicon substrates, and they have a long-term partnership and investment in the company that won the grant for glass core packaging. Who might that be?
Before we answer that question, I think it's worth mentioning right here that we've been talking about this over on Semiconductor Insider with our subscribers, talking about our recent investments that we've been making into semiconductor fab manufacturing equipment. And a number of these companies, including Applied Materials, received US CHIPS Act grants and awards, but that US CHIPS Act is sort of in a current state of flux. Now, it seems like Applied Materials is still counting on some funding to get some of these R&D initiatives up and running. But we did a recent update over on Semi Insider regarding microchip and the not so fun time microchip is having right now. They actually put their US CHIPS Act award on hold after former CEO Steve Sanghi came back. So there is just a bit of uncertainty here about this US CHIPS Act, what's going to happen to it. It seems like it will survive, but terms are likely to change. So just something to bear in mind as we go through some of the next few slides on Applied Materials and what they're working on, in part with some of the CHIPS Act R&D investment that the US government might make. Be sure to check out Semi Insider for more on that ongoing discussion we're having. The link to that is in the description below. You can also check out chipstockinvestor.com for more info.
Ultimately, Applied Materials certainly seems to think that they have plenty of growth ahead. This was it just a couple weeks ago. On March 10th, they announced that they're increasing their quarterly cash dividend by 15%, and they announced a new $10 billion share repurchase program. But as we've been talking about here on Chipstock Investor, we're still in the midst of this U-shaped recovery. Is 2025 going to be the tipping point, so to speak? Will we start to see that rapid growth in 2025?
Yeah, indications still point to that being the case the second half of this year. But in the meantime, Applied Materials is still doing more than fine. So in the midst of this cyclical downturn that especially the auto and industrial and power chip market is in, Applied Materials supplies a lot of equipment to that end market of the semiconductor industry. They are still anticipating 7% year-over-year revenue growth in fiscal Q2 2025. That ends just in another month or two. And then an 11% year-over-year increase in adjusted earnings per share. So that's fantastic for a company in the midst of a downturn, waiting for that tipping point that you mentioned, Casey. This adds fuel to that fire that Applied's management said they see in the years ahead. 10 billion share repurchase program. These are not moves made by a company that lacks vision, lacks foresight and knowledge into what's coming down the pike through the end of this decade.
Now let's go back to that question that I asked earlier about who that partner is with Applied Materials in glass substrates. This release in November noted that it's Absolics, Applied Materials, and Arizona State University getting that $300 million in funding to boost the semiconductor packaging industry in the United States. So who is Absolics?
You talked about the parent company of Absolics just a couple of months ago. You did a deep dive into SK hynix. If you're interested in that, link below. But for a lot of investors, investing in SK hynix isn't possible. It's listed on the South Korean Stock Exchange, but Absolics is almost like a back door into investing in SK hynix, I suppose you could say, because Absolics is a subsidiary of SK hynix, and Applied Materials has co-invested in this advanced packaging manufacturing subsidiary as well. Now, one of the things that is being worked on here is these advanced packaging materials, including glass substrates. We talked about this a lot last summer. Onto Innovation is one of our bets on this emerging within the next couple of years as an actual real world solution for semiconductors. But besides the glass substrates themselves, which could provide some great benefit, especially with chip-to-chip interconnects, there are also advanced substrates, including advanced silicon substrates that are also part of this equation. And part of this is high bandwidth memory, which SK hynix is manufacturing for NVIDIA, probably Broadcom and AMD as well. But remember, Applied Materials is actually leading the charge on those silicon-based advanced substrates and has the co-investment in glass packaging. Applied Materials kind of does it all. One way or another, they have their hands in the cookie jar.
And as many of our viewers know, energy efficiency is a big concern in the semiconductor industry, especially with the data center build out and infrastructure. Energy efficiency is super important. And Applied Materials is focusing on this across the board between leading edge logic chips, HBM, our high performance DRAM, die stacking, advanced packaging, power electronics. Absolutely everything requires engineering in this form.
And perhaps nowhere is this more important than in leading edge logic. So we had a big video on this just a few weeks ago about the transition from FinFET transistors to gate all around architecture transistors, or GAA. Applied Materials is a leader, along with ASML, in enabling this type of shrinkage in transistors, scale up of performance, especially power consumption to performance. This is a really big deal for Applied Materials. Check out that video from a few weeks ago. We'll link that one as well. We discussed it primarily through the lens of ASML, sorry, pun, through the lens of ASML. You nerds got that one, hopefully. But Applied Materials is highly complementary. Those two businesses can't pull this off without each other. Their customers cannot pull this transition off without that duo of especially ASML and Applied Materials. And then also, of course, the other Fab Five, very important in this as well. So as we continue to talk about, I think there are some traders out there in the market that seem to think that we are hurtling towards some sort of crash in the semiconductor industry. I think they probably are hyper focused on AI and accelerated computing. But if you exclude that from the equation, the vast majority of the semiconductor industry has been in a downturn for 2 years. And as we continue to talk about here and discuss, we're finally emerging from that downturn, from the effects of the bear market a couple of years ago. And companies like Applied, especially Applied and the Fab Five, have all of the equipment and the process technology and IP necessary to make this next transition and to head into this new phase of growth.
Let's focus on that final key point in regards to Applied Materials being more of a private equity firm than just an industry generalist. Applied Materials made a lot of acquisitions early on, but now they're focusing more on these partnerships or investing in other companies so that they can drive this innovation.
Yeah, we already talked about the advanced substrates and the partnership that they have with the SK hynix subsidiary Absolics. There's another one that recently happened in thin film lithium processes used in next gen batteries, or at least the hope is next gen batteries for everything from consumer electronics to perhaps, hopefully, even EVs and automotive later on. Applied Materials actually spun off and held on to part of its investment in this spin-off in thin film technology for batteries, got a co-investment from TPG. And this is why we say Applied Materials is almost turning into a private equity firm of sorts for semiconductor and advanced manufacturing techniques. They also have that investment that we've talked about before in Kokusai Electric in Japan. This is why we're starting to call Applied Materials, again, more than just a generalist, almost like this private equity-like firm for advanced manufacturing of all kinds. Growth via acquisition isn't going to be like it was in the past, but Applied Materials still has a lot left in the tank by making these partnerships into R&D in these various subsidiaries. They have a lot of tendrils and they're expanding into a lot of different parts of the advanced manufacturing and industrial sector.
Let's wrap our discussion with a little valuation talk about Applied Materials. This is on a backwards looking basis, price to earnings and price to free cash flow sitting around 20 to 21x, which could be to some investors a little bit expensive. However, let's take a look at it on a forward basis.
Yeah, this is really just for this present fiscal year. Remember, Applied Materials fiscal 2025 ends in the autumn of calendar year 2025. And based on expectations for GAAP earnings per share and free cash flow, it's really actually only at about 15, 16, maybe as of this recording on a good day as the market rallies a bit, 17 times expected earnings and free cash flow. And we're going to talk about another metric we haven't discussed a lot in the past, but this is a check that we like to do, especially on so-called value stocks, companies that pay a dividend and return cash to shareholders via buybacks. The free cash flow yield. This is calculated simply as, in this case, expected free cash flow over the course of the next remaining fiscal year and market cap divided by market cap. And that free cash flow yield is back over 6%. Now, longtime viewers probably know we paused making most investments in the fab equipment companies in 2024. The last time we bought Applied Materials was back in early 2023. But these companies are starting to look interesting again, especially with that free cash flow yield creeping up. This could actually be the best time, the best opportunity to buy Applied Materials and the other Fab Five and the equipment providers in 2 years. after this market correction. This is what we're looking at right now. We're more than happy to have Applied Materials as a core position in our portfolio, especially the semiconductor portion of our portfolio. And check out Semi Insider for more. We're having a lot of discussion about that right now with our members. Link again in the description below, and check out chipstockinvestor.com.
Thanks everybody for watching this episode. We'll see you all again very soon at Chipstock Investor.